I analyzed 100 business models, and these are the top 5 with the highest profit margins, and almost nobody talks about them. Not dropshipping, not crypto, not the stuff everyone is already doing. I'm talking about businesses that quietly turn everyday people into multi-generational wealth builders. Businesses where the money keeps flowing, even when you're sleeping, traveling, or doing absolutely nothing. And here's the wild part. Most of these don't require a fancy degree, a huge team, or millions in startup capital. But before we get into the list, I want you to think about something for a second. Why do some families stay wealthy for decades, even across 3 or 4 generations, while others work just as hard their whole lives and still struggle to get ahead? The answer isn't luck. It isn't talent. It's the type of asset they built. Stay with me, because this is about to change how you think about business forever. Most people think about business the wrong way. They think, find a product, sell it, make money. Simple. And yes, that works, but there's a ceiling. You sell 1 unit, you make 1 profit. You stop selling, you stop earning. It's a treadmill, a beautiful, exhausting treadmill. There's actually a term for this in psychology. It's called the effort-reward loop. Your brain gets wired to believe that income only comes from active effort. So the moment you stop working, your brain tells you the money stops too. And for most jobs, most businesses, that's exactly true. But generational wealth doesn't come from the treadmill. It comes from building something that compounds, something that grows on its own, something that other people need repeatedly, not just once. The wealthiest families in the world didn't build generational wealth by working harder. They built systems, businesses with high margins, recurring demand, and assets that appreciate over time. So let's break down the 5 business models that actually do this.
Business number 1, real estate with a value-add strategy. Now, I know what you're thinking. Real estate? Everyone says real estate. But here's what most people don't say. There's a massive difference between just owning real estate and building a real estate business. Owning a property is passive. Building a real estate business with a value-add strategy is how you actually scale wealth. Here's a simple example. Imagine you buy a small apartment building, maybe 6 units, in a growing neighborhood. The current rent is below market because the previous owner never updated the units. You come in, renovate, raise the rents to fair market value, and suddenly the property generates 40% more income than before. Now here's the magic. In real estate, the value of a property is tied directly to the income it generates. So by increasing the income, you've also increased the property's value, sometimes by hundreds of thousands of dollars, without the market even moving. This is what professional investors call forced appreciation. You didn't wait for the market. You created the value yourself. And the psychology behind why this works so well? Shelter is a fundamental human need. Demand for housing doesn't disappear during recessions, doesn't go out of style, and doesn't get replaced by an app. High margin, recurring income, appreciating asset. That's the generational wealth formula. Business number 2, software as a service, or SaaS. Let me paint you a picture. Imagine you build a simple tool. Maybe it helps small restaurant owners manage their bookings, or helps freelancers send invoices automatically. Nothing complicated, solves one clear problem. You price it at $29 a month. You get 500 customers. That's $14,500 every single month from one product that you built once. This is the power of SaaS, software as a service, and the profit margins are almost unbelievable. Industry data shows SaaS businesses commonly run at 70 to 80% profit margins, meaning for every $100 that comes in, $70 to $80 is actual profit. Why? Because once the software exists, it doesn't cost much to deliver it to the next customer. You're not shipping physical products. You're not hiring a new person for each sale. The code just runs. And the recurring monthly subscription model means your revenue is predictable, stable, compounding. Here's the wealth psychology angle. Humans are deeply resistant to stopping subscriptions for tools that solve daily problems. Psychologists call this loss aversion. Once your software becomes part of someone's routine, canceling feels like losing something, not saving money. That's why SaaS businesses retain customers for years, and retained customers are the foundation of generational wealth. Business number 3: content and intellectual property. This one surprises people. Think about Walt Disney. He created characters in the early 1900s. Mickey Mouse first appeared in 1928. That's almost 100 years ago. And Disney's Family, the company built around those characters, still generates billions every single year from the same intellectual property. That is the definition of generational wealth. Now, you don't need to be Walt Disney, but the principle works at every scale. A well-written book that solves a real problem. A YouTube channel built around evergreen financial education. An online course teaching a valuable skill. A brand built around a unique personality or perspective. These are all intellectual property. And intellectual property has one extraordinary quality. It can be sold, licensed, or monetized indefinitely, long after the original work is done. The time-to-money ratio here is remarkable. You create something once. It generates income for years, sometimes decades. And here's the psychological insight that makes this so powerful. People don't just buy information. They buy clarity. They pay for someone to take complexity and make it simple. If you can do that in any field, finance, fitness, cooking, relationships, business, you have an intellectual property business. The startup cost? Often just your time, your knowledge, and a camera.
Business number 4: laundromats and vending route businesses. Okay, I know this one sounds almost too simple. Bear with me. There's a category of business that wealthy investors quietly love, and that most people completely overlook, called semi-absentee cash flow businesses. Laundromats are the classic example. A well-located laundromat in a dense urban or suburban area can generate anywhere from $5,000 to $15,000 per month in revenue, with incredibly low labor costs. Most laundromats run nearly automatically. Customers come in, use the machines, pay, and leave. You hire one part-time person to clean and collect cash. Vending route businesses work the same way. You own machines placed in offices, gyms, schools, and hospitals. People put in money, products come out. You restock every couple of weeks. These aren't glamorous businesses. They don't make great social media posts, but they quietly produce consistent, reliable cash flow month after month. And that's the lesson wealthy families understand deeply. Glamour and profit are often opposites. The most boring-looking businesses are sometimes the most financially powerful. Warren Buffett has a famous principle: invest in businesses so simple that even a fool could run them. That's not an insult. That's a compliment. Simple means durable. Durable means generational.
Business number 5: staffing and recruiting agencies. This one is probably the least talked about, and possibly the highest potential on this list. Here's how a staffing agency works in plain language. A company needs workers, maybe nurses, construction workers, IT professionals, or warehouse staff. But hiring is complicated, slow, and expensive. So they call a staffing agency. The agency finds the right people, handles the paperwork, and sends workers to the company. In return, the agency charges a markup, typically 20 to 50%, on every hour those workers work. Now, here's where the math gets exciting. If you have 50 workers placed at an average of $25 per hour, working 40 hours a week, and you're charging a 30% markup, you're generating over $15,000 per week in gross revenue. That's over $750,000 per year, from a business that largely runs on relationships and systems. Profit margins in staffing typically range from 15 to 25%. For a service business, that is extraordinary. And the scalability? Limitless. Every new industry, every new city, every new client relationship compounds your income. The deeper wealth insight here is this:
Staffing agencies sit between supply and demand. They don't produce the labor. They don't do the work. They connect the two sides and capture value in the middle. This is called being a market maker. And market makers historically build some of the most durable wealth in any economy.